We are live. I'm gonna bring it in some.
Okay.
All right, what's up, everyone? Usually takes a few minutes for us to start getting people in here, but this is Jodie Tanga from Pacific Rim Mortgage. We were just shooting a video with Mahe. We did a whole new video format actually that we've never done before, so stay tuned for that. We compared. We took past listing videos that we've sold, and then we played them and gave like our reaction. Talked about the neighborhoods.
Cool.
Talked about listing them, some that were hard to list, some that were hard to sell, whatever. But yeah, so we just did that. All right, I see my first person popping in. Drop us a comment. Let us know that the comment section's working, etc. So yeah, just finished shooting a video with Mahe. This is Jodie from Pacific Rim Mortgage. She is our preferred lender. Most of the deals we do end up being with Jodie for several reasons, and we can get into that later. But we looking forward to more people going in and getting these questions stacked up. Let's start with rates. Rates aren't good, huh?
They just went up. So they're going to go up. So the Jerome Powell, Fed chairman,
Okay.
he did speak yesterday.
Oh, really?
And yep, he
What's
did.
that mean?
It's every time like anyone from the Fed is going to speak, it's like calendared in.
Mm-hmm.
So the market just waits like.
But sometimes I hear from Derek, your brother.
Yeah.
Her brother's name is Derek, same spelling, everything. Yeah. Maybe a little bit smarter than me.
Maybe.
Maybe a little like hundreds of IQ points higher. But
different kind of smart.
Different kind of smart. He talks about how a lot of times these adjustments are built in before these events happen.
Correct.
So sometimes like the market's already afraid because they know that the jobs report came out and that's what the guy's going to talk about.
Yeah.
So sometimes when the speech happens or whatever happens, you could even see like a downward tick.
Yes.
Because the
yes.
reaction that preceded was like an overreaction. Like, so what's happened recently? Rates are,
so what happened was that
what had happened was
the market was expecting him to say hopefully that we're going to slow down the increase of interest rates.
Okay.
The market, this is what the market anticipated, right? That Jerome Powell is going to be like, okay, we feel like we're winning this good fight against inflation. We're feeling good and optimistic about it. And so perhaps when we thought maybe we were going to increase rates in June, maybe we can push it out to July and see how the economy reacts,
okay.
Right? So, but what he said was, no, we looked at the metrics. We're not comfortable. Inflation is a long-term fight. We're not where we want to be. We're increasing rates, and it might even be faster than what I had originally said.
So this is what I've been talking with teams across the country, and pretty much what we all felt. I know we felt in our businesses here, and probably the lenders you speak to across the country saying, but we all like fourth quarter was like, oh no, things are slow, etc. January still felt that way until the end of January. Now, I don't know if this probably correlated with interest rates going down a bit in January.
A little bit.
But they just show that there are all these people on the fence, ready to jump off the fence and like waiting for some kind of positive trend.
Yeah.
And ending of January into February, we like had gasoline thrown on the business. Like there's so many calls, so many consults.
Yeah. We had like record application months.
Really?
Yeah.
Which is so in the middle of this down market, right?
Yes.
Quote unquote down. But is that because the inflation reports that came out like into December into January were showing that inflation was under control, so rates went down? But then the jobs report came out recently, which was the big scare, right? Is that right?
Yeah. I mean, no, it's not right because inflation has always been increasing.
Did it slow? Is that what happened?
Oh, yeah, it slowed down.
It slowed, so they lowered rates a little bit in January, February?
Rates improved because the market felt like in the forthcoming future that perhaps we were going to slow down the rate increases.
I see. So
that's when we saw these nice days of these couple of days here and there of better interest rates.
Okay.
And then it was kind of like still up and down.
Okay.
But then
we see you guys in the comment section.
Hi.
Jordan, Robert, bad videos, etc.
Yeah.
All right.
So then the rates, then anytime that a metric comes out, primarily CPI, which is what inflation is.
What is CPI?
Consumer Pricing Index.
Consumer Pricing Index.
So if milk was $4 a year ago, and today it's like 450.
And then if the CPI goes up a certain percentage, it probably should have gone up more because they have a history of kind of removing certain things. Like copper is skewing the numbers. It went up tenfold. Let's remove that.
Yeah.
Right? Those averages off.
Right. So they have like different categories of CPI.
Okay.
Which are all paid close attention to.
Okay.
And housing is one of the ones that the Federal Reserve and just the national economist as a whole wants to see slow down in order to, because it's such a huge.
So the government were partnered with us. They were saying, they were like, here's free money.
Yeah.
Here's free money in the middle of this COVID scare. The government was our partner and like pouring gas on the housing economy. Now, recessions and housing market corrections do not always happen within 18 months of each other. So they're not always directly tied like the way they're in 2008.
Right.
Historically. Now, moving forward, I feel like maybe that they will be more tied. But historically, when government intervention was less so in the 20s, 30s, 40s, 50s, 60s, 70s, 1980s, etc., it wasn't always recession equals housing market recession. It wasn't always the case. 2008, our recency bias tells us that they are tied. Right now, they seem inexorably tied because the people adjusting the rates that are pulling the strings are looking at the economy and like, we need to slow down housing.
Yeah.
So anyways, rates are bad. Derek, so I speak to Derek Tanga, I speak to Jodie Tanga, I speak to these people. He told me, I don't want to quote him exactly or say this is his exact quote, but he said, I have like an 80% confidence rate that rates are going to go up twice more this year.
Yes.
Like rates are going to go up more.
I definitely agree with that statement.
So when I'm talking to buyers and I'm talking to sellers, we take that into account. I never want to be that agent that like figures out creative ways to instill a sense of urgency. So you buy now or you sell now, but we do have to take these things into account. And they just raised rates. Like the Jerome Powell, Federal Reserve Chairman, just reacted in a way that said, no, inflation's a long-term thing. We got to keep raising rates and fighting it. So we got to keep putting water on this fire. And the situation might not be better later this year. And
right,
the old saying, we think probability is that it won't be.
Yeah.
Supply is still low, so you would think that rates went from 2% to 6%. The market would be at a standstill.
Right.
But supply is still really low.
Yeah, everyone's waiting for like the supposed massive crash, and at the end of the day, there's still multiple buyers that are wanting these properties.
Yeah. So
it's not a good situation.
Basic supply and demand. If you have watermelons and everyone wants watermelons and there's only 10 of them, your prices will remain high, even if they're starting to go old or they're not ripe yet or whatever they're not refrigerated yet. You still have,
or they cost more.
Or they cost more. You have the limited supply of what people want. So, anyways, shout out Jordan. What's up, Jordan? Robert. I'll see you soon, Robert. Jennifer Edie. I miss Hawaii. Currently in the Carolinas. Stack your questions up. I see 15 people out there and growing. Let me know if you guys have real estate questions just about Hawaii question. Jodie's a local girl. Went to Iolani. Sorry, fancy public school or private school. Is a businesswoman here in Hawaii. Played soccer on the mainland for college. Grew up playing soccer here. So we had a client recently. They were talking about buying their house based on the soccer club.
Yeah.
And so I connect them to Jodie. They're like, well, male or female? What age? Like different soccer clubs for different things. So yeah, ask us your questions in the comments. While we're waiting for people to ask questions, what are rates going to be? Like, how high is it going to get this year? Like 7.5%, 8%? 8?
7.5 for sure. We're not far from 7.5 conventionally.
Okay. So what are rates today?
VA is hovering right about a 5.99.
Okay.
And conventional is hovering right about a 6.75.
For the rest of this week. Now, I'm going to make a point and I'm going to ask a question. Rates can change day to day. And sometimes clients are upset. Like, well, we were quoted this. Sometimes they're happy. It's like, well, we were quoted this and rates went down.
Right.
They literally can change day to day, especially with the volatility of chairmen speaking and reports coming out. how do you feel about rates for the rest of this week? Because, like, for example, Drew, they might lock tomorrow, or like, how are rates going?
I think we're steady until Tuesday.
Because
what
happens Tuesday?
Well, on March 14th, which is Wednesday.
Okay.
Is it Wednesday? We don't know dates. We're not the good people for this. But I'm pretty sure it's Wednesday.
Okay.
14th is Tuesday.
Oh, okay.
14th.
So until Monday.
We're stable till Monday.
Yeah, because on Tuesday, the 14th, that's when the CPI comes out. That's when the inflationary data comes out. And I hypothesize that it's not going to be wonderful.
Okay.
And so when inflation data comes back and it's not great, then that's going to further make Jerome Powell say, see, I told you. And then, and then the market's going to react. So regardless of what Jerome Powell actually does, now there's this period of time between when he is going to deploy the next rate increase and this leading indicator, which is inflation. There's this time period where he's not going to say how much he's going to increase it yet.
Okay.
So the market has to pay these really, yeah. And so if you're in charge of producing interest rates for these companies that are doing, I don't know, hundreds of millions in volume per month, you're going to err on the side of caution.
Right.
So it's just this time where until it happens, it has to be built in.
Okay.
Yeah.
There's the realness. Sorry for the doom and gloom, but rates are not historically the best. However, I'm still looking to buy this year. I have clients still buying. But the exits, the principles never change. Drop me back 10 years ago, 20 years ago, 7, 6.5, 5 years in the future. All the principles will be the same. What is your staying power? How's your family life and your marriage? How's your job? What is your intention for buying in said location and staying? What are your exits? And we look at all those no matter what's going on. Because even if money is cheap, there's usually a reason why money's cheap. If rates are at 2 or 3%, what other world chaos is happening that they feel they need to make interest rates that low?
Right.
And that adds a sense of fear because of a outside factor. So principles remain the same. We kind of run through the same checklist either way. Narita Lopez. Hello, I'm from Utah and see some housing prices similar to out here. How has the increase in interest changed the Hawaii market? Has it slowed? Yeah. So it's a weird time, right? And we need a little bit of hindsight to really know how the market's reacting. The more volume you do, the quicker you can gauge it. So if you're selling homes every week, you can kind of you have a better finger on the pulse. Things were slower in the fourth quarter. We're still selling homes. January still started off kind of slow, but ending January to February went kind of crazy. It felt like the peak of the last market. It was really crazy, but just because there's a small nudge of positivity into rates and into markets. And so what that just shows is there's still a lot of people sitting on the fence ready to jump off at the first sign of positive rates, or feel like they're getting a great deal on the house or whatever.
And it's not just that, but it's also getting accustomed to the interest rate.
That too. So exactly. So when the rates change, people are like, oh, I'm going to wait. But they still have a need. They still need a house. They still don't like renting. They're still, their job was going to move them within 9 months, but now they're here.
Right.
Whatever the case may be. And so these people are just accustomed to the rates. Now, the prices have come down in most areas. Have they come down to where, so if the house used to be worth $1 million and the rate used to be 3.5 and your payment was here, has the cost of the home come down to meet the increase in the interest rate? No. You're paying more per month. So the house might go for $930 now, $925, $960, depending. It might even go for $880 when it used to be $1 million. But the rates are higher to the extent that you are still paying more per month than you were back when it was worth $1 million.
If you would have paid $1 million.
If you would have paid $1 million.
So a lot of people, like some of our buyers are like, man, we should have waited because they see some prices coming down. And I'm like, well, you know, the rates are lower.
So one thing I heard someone say, you know, on IG, it's like, stop acting like a cash buyer. You're not a cash buyer. You cannot underwrite deals as a cash buyer. So if you could have got it at $1 million, and we're using, I know some people out there and they're in like Las Vegas, like Jordan, they're like, $1 million, gee, that's luxury. But here, that's kind of a normal house, right?
Yeah.
So if you could have got it at $1 million before at a 3% rate, and now you can get it at 9.25 for a 7% rate, which one are you better off at? Well, when are you exiting? You know, when are you exiting? How much cash do you have in the deal? If you're an all cash buyer, then yeah, waiting could have been advantageous. If you're on a VA loan, that $1 million price point at 3% gives you a lower payment. And so now when you know, go move somewhere and you're going to rent it out, you have a better chance of cash flowing or taking less of a loss. You have better staying power. And in 10 years, when you go to sell, that's what really matters.
Right.
Right. So it just depends. And we can underwrite it and run the numbers with any of you guys if you're interested.
And everyone has their own unique situation. So there's no right or wrong.
But don't think you're a cash buyer. Like, understand, would I rather get a home at 920 than $1 million? Obviously.
Yeah.
Can I make the payment or even get the home I want at 925 with a 7% rate? I might not be able to get it anymore.
Yeah.
But I could get it at $1 million with 3%.
Right.
Now, if I could have my cake and eat it too, so I'm all cash, I buy it at 920. When rates go down to 3 again or 4, I do a cash out refi.
Yep.
So now I have my money liquid at the 4% rate instead of the 7. Great. Not many people out there buying for 900,000 cash or $1 million cash and using these measures, right? So, Ian, how's it from Washington? How's it? Multimedia. Stack us up with your questions, guys. I see a bunch more people in there now. Hit like, hit comment. When you do that, it YouTube will start to invite other people. So leave us a comment, even if it's just to say hello. And in the meantime, so Jodie, you grew up in Kailua?
Yeah. Old Kailua. There's a hat that says Old Kailua.
Really?
Yeah.
I haven't seen it. So
it's sold in Kailua.
Really?
Kailua.
Have you seen that before? Kailua. Old? Have you seen old Kailua? Like the shirts or hats?
It's like old Kailua. Yeah, because
That's different.
Yeah.
Yeah, Kailua people got to distinguish.
Yeah. Because it was, I was born and raised there. And that was when you could go flying through an intersection on your bicycle without any concerns of getting hit. There was no traffic.
It was a transient.
Yeah.
I was following a home for sale in Kailua. Asking price is 1.8 on the market for 3 months. Now it's pulled from the market. Do you think it will return at a lower price? Robert, good question. So will a home that was listed for 1.8 that was pulled after 3 months return? It just depends.
Sellers don't have to sell. Not all sellers have to sell, right? So when it's like, well, I'm just going to wait for the market to crash. I'm just going to, and then everyone's going to have to bring their prices down and then I'll take my pick of the litter. Like I'm
guilty of this too. We think because 2008 happened and that's our most recent, like big experience, that it's going to happen again and we're going to profit crazily. Like we're going to have, just come in and scoop and COVID was kind of that. Prices went down extremely low in the middle of COVID for a short period of time, went back up. We kind of had our cleansing period in COVID, like one like this. There's reasons why we could say that could happen again. And I hear very intelligent people talk about why there could be another housing market crash, but also hear very intelligent people make a very good argument on why there wouldn't be. So I don't want to sit here and say I know that there will or there will not be one. One thing I do know is that a normal foreclosure rate is about 1%. So out of every 100 loans, one ends up going into foreclosure. And we've been at like 0.2 for a long time. I think maybe we're like 0.4 now or something.
Yeah.
And so even if we increase back up to 1% foreclosure rate, that would just be a return to normal. we don't know that 2008 is going to happen again. So back to your question, Robert, will a $1.8 million house come back on the market lower? It just depends. Why do they need to sell? Is it a probate or all the kids fighting? Everyone wants to cash out, so just get it sold. 1.7 between 5 kids doesn't make a big difference. Is it a older couple who doesn't have to leave Hawaii? In fact, they don't really prefer to, but it's just the grandkids in Colorado, and they can't convince the kids to move home to Kailua. They've established roots in Colorado, so they do want to sell. But they were addicted to that 1.8 price tag that was possible 12 months ago, and they're not leaving until that returns. So maybe not. It's very situational.
Yeah. And then it's like a lot of sellers would be like, well, I'll just rent it then.
Yeah.
So there's no way to know. Everyone has their own unique situation.
It just depends. Yeah. I was looking to purchase 2024, 2025 when things cool down, looking at cheaper condos. Is there a 40-year mortgage in Hawaii?
Not yet.
So we don't know that 2024 or 2025 is going to be any cooler. In fact, 2024 is an election year, right?
Yeah.
So I got to imagine that.
And it's going to be a crazy one.
It's going to be a crazy one. Now, I'm not talking about left versus right or anything, but I do know that if you're a president, you would love for a stimulated economy to be in place when you're running for re-election. If you are an establishment party, the GOP or the DNC, you would like, if you're in power, you want a stimulated economy when it happens. And so if you can lobby with the feds and get the rates lowered at that time, just in time for debates and whatnot. So I have, I think it's going to be worse than like 2024. I think we could see lower rates for that reason, like higher prices.
Yeah.
Because
I agree.
We'll get some stimulus that's very politically driven.
Yeah.
So whereas housing market and economy weren't always tied together historically, I'm afraid they kind of are more so now because of the overlapping of politicians and the Fed. Mm-hmm. Has farming and homesteading made a comeback in Hawaii? Do you mean like buying a house and farming on that land? More so on Big Island. Maybe like upcountry Maui, Kauai, on the other islands. Thank you guys for the comments. Keep them coming.
There is a cool farming program. Have you heard about it though?
No, what? You were thinking about buying some land to farm, yeah?
Yeah.
What?
I want to do that. But so there's a program through the state that you can learn how to farm. Mm-hmm. It's like a 7-month program that you have to show up and learn how to farm. Like, I wish I could take it because I want to learn how to farm.
Okay.
But once you get through the program, you are able to lease like half an acre to an acre of land. So this isn't buying, but still it has to do with farming. Okay. And then you get to farm the land, and then you will have a business.
Wow. So it's like an advanced level of urban farm, like the urban farm where you rent a little, so you actually rent a farm. That's so you
actually learn.
And then what? Do you have to like sell it to like local?
I don't know the rules. I don't know the rules about that, but I would think that the intention is to have locally grown, fresh produce, and that to make it onto tables.
That sounds cool. I told my cousin. My cousin's a farmer.
Yeah, I'm trying to think of someone that can do it.
Yeah.
Like who can go and learn for 7 months and do it and take advantage of it. It's a cool program.
I want to talk to my cousin about it. Hi, I'm mostly concerned about not having enough money saved before my PCS move. Mm-hmm. How much should I have saved if I plan on purchasing a condo below $550,000 using the VA loan? Well, Christopher, I mean, you can buy with zero money with a VA loan. That's the beauty of the VA loan. Of course, the less you put down, I can say it 2 ways. The less you put down, the less risk you have in a certain way, but also the less you put down, kind of the more, because your payment's higher, you have more debt. There's more debt to clear in your 3-4 years that you're here. Also, I didn't really think about this like sort of pathologically before, but if you were to ever foreclose and have to walk away from that property, I'd rather have nothing in it. Not even the funding fee. I'd rather have nothing in the home. If I have to like short sale and fix my credit over 2 years and buy in 2028 again or whatever, I'd rather have no money locked into that situation. So I bought with the VA loan. I'd have to pay funding fee.
So the reality is that when in a higher interest rate market, you are less likely that the lender is going to be able to give you a higher interest rate and then cover all of your closing costs.
Oh, okay.
So if closing costs are going to be, let's just say 9,000 for closing costs, then previously, like when rates were 4%, even 5%, even mid fives, we can give you a higher interest rate, like a 6.25 or a 6.5, and then credit you 9,000 so that you're truly not covering closing costs and you're doing zero down.
Okay.
However, as rates continue to rise, there's less what we call rebate to be able to rebate back to cover closing costs. And so I would want someone to be able to at least be prepared to pay half of the closing costs.
Okay. So how much? So if might be buying around, okay, so you might be buying around 550, and the rates are high where those margins aren't there. Have 4,500 saved.
Yeah, so 45 would be like half. So I think that there's always going to be room for, not always, but we'll see how the rates move. But for the lender to contribute, it's not free money. So I'm giving you a higher interest rate, and then I'm crediting you like $4,000.
Yeah.
And then you would come in with the rest. So if the total closing costs are going to be 9,000, then I would say try to have at least 4,500 for closing costs.
So I don't know if I think about it. Anyways, I'm just gonna start talking, and then I'll throw in my my disclaimers after the fact. But let's say you're on TLA, and to remain on TLA, a lot of times you have to show the offers you're writing or the rental applications that you're doing like at the 2-week mark, and then you guys continue.
Yeah.
And then you get into escrow, your escrow can go all the way to your 60 days of TLA, and you can be in that hotel. And especially if you don't have kids, I mean, a hotel can seem like forever when we have kids, but especially if you don't have kids, you're getting that per diem daily. Eat peanut butter jelly sandwiches and spam musubis and keep your living very minimal. So you can save that for 4,500 easily while you're on TLA.
Okay, let's get real though.
What?
How long does it take to get reimbursed for your TLA?
That's true. So I mean, but you will get the money. So if you have, let's say you're like, well, I have $5,000, but this is the only $5,000 I have, or I don't want to spend this $5,000. If you have all that per diem money stacking up, then like you can, and per diem, you're getting paid during a check. So you're not getting reimbursed on the per diem.
Yeah, but that's not enough.
My point is, if you extend your TLA as a military person, so temporary lodging assistance for the full 60, and you live very minimally, you can save up a good amount of money, especially for a junior enlisted person.
You can definitely make money.
Yeah.
You can come out ahead. But for that to be perhaps your strategy, things get super tight, and we've done it where it was like we're using the pays that you're actually getting, applying it to closing costs. It's pretty stressful. It's totally doable. It's a good strategy.
Yeah. If you're a senior enlisted, you're an officer, you should have 4,500.
Yeah.
Like you just should. If you're a young person and you're like, I believe in this real estate game and I want to buy, and I'm from Hawaii, and so if I keep this condo forever, great, etc., then that few thousand on TLA might make the difference for you. Just an idea.
And there's other stuff too that you can plan ahead of time, like if you're more than 60 days out, because us as the lenders are only going to do a 60-day look back on your liquid funds. So let's say you have a credit card that you have, I just got a deal for the remainder of 2023, 3% on all credit transfers and cash advances.
But isn't that going to increase your debt to income, or it's
a little bit? It's minuscule.
It's minuscule. Oh, okay.
Yeah. So let's say you're more than 60 days out and you're like, okay, I have access to this very low interest rate money. You can do a cash advance. Yes, you have to do it ahead of time because you got to get that money into your checking account. Let it, what we call season.
Yeah.
And so now I'm not even going to go, I call it a look back, but I'm not even going to get to that actual statement where you transferred that money into your account. And so you're golden, and that's the money you can use.
Creative. All right. Who else we got? How's the local housing market? Is adding inventory? Yeah. So we kind of answered that, but inventory is up a little, but there's not enough supply to create this buyer's market that everyone's hoping for. We shall see what the future brings. There's a condo project in San Diego with an organic farm. That's awesome. Looking to buy a condo in Oahu, not sure what city. Want to open a taco shop. I'm from California, but bought a house in the San Antonio area. I bet you, are you from like the San Diego area, Kazi? San Diegans are crazy about the Mexican food. I have a client, Chris Grimes, the one that we like reunited on. He has his like, what's he call it? SoCali burritos. He's making San Diego burritos out here. Shout out to Jodie and the Pacific Rim team. Really helpful advice for me and my wife, hoping to have a second home in Hawaii to escape the hot and cold extremes here in Tokyo. Yes, and our team's working closely with you. Aiden, I know, is in close contact with you. Thanks for the shout out. Any advice for a first-time VA loan veteran buyer? Saved $100,000.
Wow, that's a lot.
Awesome
that's
for
good
you.
Good job.
Is it better to wait 1.5 years to save $200,000?
No.
Plans to move? Well, most likely no.
Mm-hmm.
I'll give a couple of things. If no one can time the market, JP Morgan and Schwab both did 15-year independent studies studying people who invest, and like 7% of people time the market. And of those 7, probably 5% were lucky. And so maybe 1 or 2% of people skillfully beat the market. No one knows. No one knows what the market's going to do. So you have to assume that you can't time it.
Right.
So coming from that viewpoint, if it's better to get in than to not be in. So if inflation is this river running, now I don't know your savings rate. In what period of time did you save the $100,000, right? If you're saving 10 grand a month because you're paid high, you live with your mom and you guys love living together or something, then who knows? Maybe you should live with her and save some more money. But for most people, the economy, inflation, the housing market is this river. And if you're trying to run by saving, you're trying to run next to it and outrun it, you're going to get tired. You're not going to be able to do it. I would rather buy a house, jump in the river, use its current, use the inflation, use the appreciation, use the momentum of the river, and be able to paddle. So put that $100,000 on your mortgage. As you save that money, you can put it on your mortgage, which jumps you in the amortization schedule, which means now when you make your minimum $3,000 payment or whatever, more of the $3,000 goes to your principal than the interest because you put these chunks on top of it. There's other strategies with lines of credit and stuff and different creative, mortgage products, but for the most part, without getting too technical on this live, trying to outpace the river that is the market and inflation is not going to work for most people. Now, if you and your wife both earn 400 grand a piece, and you live at home and you love living at home, or you already have I don't know, maybe we just have to talk to you and consult you to see. Chris, you'll need earnest money,
and it comes down to affordability.
True.
So ultimately, if you're looking for a mil or $1.5 million, and I show you your numbers utilizing 100K, I just can't, and it's a number that fits within your budget. I can't, depending on how long you anticipate owning the home, I can't really see an argument to wait. Depending on how long you anticipate owning the home.
Yeah.
If you're in it, someone who's saved 100,000, I don't think you're planning on owning the home for like 2 to 5 years. Someone who saved 100,000, you're planning on owning the home for a longer period of time. Yeah.
It's true. Yeah. Jodie and I, we really don't like being that professional, that advocate, that fiduciary that's always figuring out a way for you to buy with us. No. But fact of the matter is,
I just told someone they have to wait.
I just told someone to rent instead of sell.
Yeah.
I said, keep your place, rent it out, take a loss, and then rent a home with your family, with your mom. But usually, like, buying real estate and waiting is a tried and true practice. It's never failed. Mm-hmm. Even if you bought it in Detroit, which has suffered, if you wait long enough, it'll be fine.
Yeah.
If it doesn't work out, we have bigger problems, like the value of the dollar, America's positioning in the world pecking order. Barring those things, buying real estate, especially in Hawaii, and waiting is always worked. Mm-hmm. So someone said, hey, you would need earnest money. Where'd that comment go? Did oh well, someone said you need to save up earnest money and stuff. So yeah, if you're buying a home with a VA loan, you can buy with no earnest money. You can buy with $1 or $500. Just depends on how desperate the sellers are. But typically, you like to have at least $1,000 saved up for that. Thank you so much for confident that I have enough after your feedback. Thank you. You're very welcome. I checked the Hawaii-based bank's health rating, and most had B rating. I'm concerned. Do you have a Hawaii-based bank for transactions? I think only Central Pacific Bank had an A rating. I don't even know what that means.
That surprises me because First Hawaiian Bank is is owned by Bank of the West, which is like one of the biggest banks in the world.
So someone asked me this. They said, "Hey, how come you don't see big banks here in Hawaii?" Isaac asked me that.
Yeah.
And what you're saying, is it kind of like Long's Drugs where it is CVS, but because it's Hawaii, we keep it Long's Drugs?
Yeah.
So First Hawaiian
that's
is like,
only FHB. That's only First Hawaiian.
Okay.
And even a lot of people don't. Personally, I'm like, I don't want to use First Hawaiian because of that.
You want to use local banks?
Yeah. The reality is that Bank of Hawaii has tried to enter the market, and so has Wells Fargo. And at the end of the day,
Hawaii people don't trust them?
Yeah.
Or are there?
There's not different programs.
Is there thick Hawaii bureaucracy and
of course
politics that don't allow these big banks in because the lobbyists of these other banks don't let them in?
They were here.
Who was?
Bank of America and Wells Fargo.
Really?
Yes. There was a Bank of America in Enchanted Lakes at the old, where the Consolidated Theaters is. Yeah.
Oh.
But the Consolidated Theaters isn't even there anymore.
So what do these health ratings mean on these banks? What does that mean?
I mean, I would think, just not really knowing, I would think that it has to do with the total reserves, and the turnaround rates and stuff like that. Not to do with mortgages.
Yeah.
But at the end of the day, they're all FDIC banks. And so unless you're keeping, more than $100,000, you're good as far as your money goes to that extent that you trust those types of commitments from the government.
Sure.
But yeah, I mean, it's a great question. And I would say that there's also credit unions that have their own, the NCUA, National Credit Union Association. And so maybe look into some of the smaller credit unions. You might have a better comfort with those.
Yeah. Well, good question. Central Pacific Bank, I know it to be the bank that kind of closes early. They're closed at 4 p.m.
Yeah.
And businesses like to bank with CPB.
Yeah.
I don't really have an opinion on banks otherwise. I bank with Navy Federal primarily. So I checked the Hawaii-based banks out there in San Diego. I knew you were a San Diegan. San Diegans with your Mexican food. From Chicago, what about the Captain Cook area? Big Island? I don't know. Cheaper, more affordable. Does Hawaii have 0 property tax annual payments for veterans rated 100%? Yeah.
But
what? School me.
You do have to pay a $300 per year administrative fee.
Yeah. Jodie's cute.
Oh.
Can a non-veteran assume a VA loan? So tell me. So they could.
Great question.
So there's this whole VA assumable loan thing. We should do a video on that alone. But usually the VA assumable loan thing doesn't work out because let's say someone bought a house let's say they bought it for $800,000. They owe $600,000. It's worth $1 million. Someone has to come with that $400,000 delta. Now I've heard of people getting second position liens and loans to fulfill that delta. I've not seen it done. Have you done one?
Mm-mm.
I've not seen it done. I think that probably happens more on small mainland transactions.
Yeah.
Where there's $20,000 to make up or something. So a non-veteran could assume a VA loan. So I could let my sister assume my VA loan, but my VA entitlement would be taken up, right?
Correct.
So I better have the cash to go, do a conventional loan on my next home or whatever. almost never is that gonna happen.
Right. So the real scenario that comes to my mind as an example for people to understand is like, I'm 90, I'm not buying again. I'm going to my retirement home, or I'm going to live with my daughter, and that's where I'm going to be until I transition.
Yeah.
And I don't need my entitlement. So sure, I would be happy for this young up and comer to take over my 2%,
or my grandkid,
or something to
else.
Take over my 2%. However, and I don't care how long it's going to take. I don't care if it takes 6 months, right?
That's the thing. We're doing a VA assumption right now. I don't know how. We're at least 5 months in. It's
only four to go.
Only 4. It's rough.
It's brutal. I can't wait to do a video on this and say, like, it sounds all like roses and butterflies and rainbows and butterflies, but it's so hard. It's not going to happen. And so for a seller, unless you're like, it's my best friend, it's my son, it's my daughter, it's, and I'm in no rush whatsoever. If you want your money and you want your entitlement, don't let someone assume your loan.
Yeah, kind of sucks. I'm concerned about what to do once I sell my home in Seattle, and purchasing a home in Oahu. Have money in hand and move to Oahu and go house shopping. Oh, Robert, you're connected with us. Hit us up. But to answer your question live, just depends. I actually would have to pull your file. I know the team's working with you. But there's like depending on how much money you have, right? So you could get a beautiful Airbnb on a month-to-month or day-to-day basis and then go house shopping. Occasionally there's like 3 or 6 month solutions. We can, get you hooked up with that website, furnishedfinder.com, something like that. So it just depends on what we're doing. My goal would be to sell the Seattle home and move to a new home in Oahu. Yeah. So we can write offers contingent now. The market is such that we can write offers that say, hey, they have to sell their Seattle home before they can take this one over. Someone might like that because they're like, well, we want to rent back our home for 2 weeks to make our move easier. It might be the best of both worlds. So I feel
like you should expand on that a little bit more. You went fast.
Yeah. So, right, like a year and a half ago, I should say we would still work with someone if they needed to be contingent, but we'd be very honest about it. Yeah. We'd be very honest about the reality, the chances of success and what the market was doing. It was unlikely that we could get you accepted contingent a year and a half ago. Now the likelihood is increased. Now, is it probable? I would say not. It depends on the home. Would most sellers rather sell to someone who's just ready to go? Yes. But sometimes maybe the person who needs to sell their home in Seattle can offer more. Maybe the other offer, there's one other offer isn't as attractive otherwise. Maybe they need to rent their home back for a month. So they're trying to liquidate now, but they're trying to do the same thing on the purchase in Denver where they're going. Mm-hmm. And so therefore they would love for you to purchase their home because they need to rent back for a while at a convenience. There's all of these moving parts. And so it just depends. It's very case by case, but my team is very skilled at navigating these things. And Jodie's part of like our teams. We had a buyer yesterday. He teased me. He's like, I don't know why Derek's name's even on the contract. Mahe did all the work, which behind the scenes isn't entirely true. I can see why he feels that way. That means it's working. Yeah. System's working.
Yes.
And then he said, make sure you don't work with anyone but Jodie. Also, like, we love her or whatever. I was like, what? Who am I? Like,
why are you here?
Why am I here? Yeah. Yeah, that's what he had to say at his signing. He was vouching for the women in my life. Mm-hmm. My goal would be to sell. I use Navy Fed. Navy Fed's pretty good. Online banking's good. What about hospitals on Big Island? Diane,
that's a great
people fly from the other islands for their bigger procedures, for cardiac procedures, and they get medevaced for emergencies too. So it's like living out in the country. So like if you're in Sacramento, medical's all good. But if you're like on the border of Oregon and California, north of Yuba, you might have to get flown into Sacramento. No different here. It's just there's an ocean separating us. I'll pay $300 a year. Yeah, for sure.
Yeah.
My big question is There's no exclusive buyer's broker in Hawaii, NAEBA certified.
Exclusive buyer's broker in Hawaii.
I don't know what that means.
For what purpose, Mimi?
Yeah, Mimi, what is that? I'd have to look it up. I'm not sure what that means. But what I will say is, a lot of times in my world, in the real estate world, people have all these alphabets behind their name. It's like John Doe, ABC, GRE, FYX, and
MBA.
They, MBA might be better, right? But a lot of these real estate certifications, if you are busy selling homes and helping people at a really high fiduciary level, maybe you'd have time to do those courses. Maybe you wouldn't. Now, there are some great people, especially CRS. That's a good one. You got good agents who are CRS. But a lot of times these things, they don't mean anything.
It's like learn by doing. Well, there's this thing.
Empirically,
Yeah. There's this thing called a certified mortgage consultant. It's like a certification.
For you guys,
yeah. And I looked into it because I was like, I don't know. I mean, I do mortgages. I should probably be a certified mortgage consultant, right?
Yeah.
So I did look into it a little bit, but I was like, at the end of the day, I was like, are you kidding me? No, I'm not paying $1,400 to do 8 hours of stuff that I know.
Yeah. That's something you could teach.
Yeah.
Yeah.
I have 20 years of, I mean, even when I was looking into it when I had 10 years of experience, because I had seen someone else's email that had it. But anyways, if it's like that, if it's like that type of certification, I really wouldn't be concerned with that. Honestly, a lot of the...
I might be concerned if I saw it.
Yeah. A lot of the FDIC banks in Hawaii are not going to really be your source for a mortgage, if that's what you're looking at, is a mortgage.
So Chris said, how much do you estimate is the average loan or mortgage compared to gross or net income with recent buyers? So how much do people make versus how much they're taking out on the loan? That's an interesting question. You'd probably be more equipped because Jodie being a lender, she helps more people at scale. But the debt to income ratio dictates that you can only go so high, right? You can't make $10,000 and have a $10,000 mortgage.
Right.
The VA loan allows you to have the highest DTI, right?
Yeah. So that one, if your credit is excellent, and you have established credit, and you're older, so that's just that. It comes down to it. The algorithm knows your age. Then you can get upwards of 70%.
So yeah, you could, but there's people making 10 grand, a couple making 10 grand and having a $5,000-$6,000 a month mortgage. Now, I live in a little house. I'm one of the more successful agents on the island. We own a couple of properties, run a few properties, but the one I live in is less than 1,000 square foot. It's 970, 980. We're getting a gazebo built because it's so small. I'm an advocate of being minimal, building up your cash flow, building up your investments, and then go get that beautiful home once you feel the time's right. But in terms of the average, I don't know. People in Hawaii,
it's definitely 50%.
50% of their income.
People are maxed.
So Dave Ramsey will tell you 25% of your income, and that'd be great if you make 10 grand a month or more and have a $2,500 a month payment. Mm-hmm. That'd be awesome. It's not possible for everyone, and the cost of waiting can be grave.
Yeah.
The cost of not getting in and using the momentum of the economy, the market, inflation, appreciation. I did it. I didn't buy till my mid-30s, and less sophisticated people just told me principally because they knew it worked. They couldn't explain it, but I'm too hard-headed and my ego's too big. They're you should buy. And I was like, nah. I only wish I would have. I would have. I'd be worth at least 7 figures more, probably multiple 7 figures more if I learned all this stuff earlier and bought sooner and waited. Buying a home is so stressful but so rewarding in the end. So my friend and Coast Guard guy who's buying right now, we were talking about it, and I was like, it's only going to be weird for the first couple months. After that, you're like, oh, I own a home. This is awesome. I could do it again. Hello from Emily and Noah Peterson. Haven't forgotten about Core Team Hawaii. Just getting things squared away. Can't wait to get the ball rolling. Thank you, Emily. Look forward to keeping it going. What are the interest rate lock options you offer look like? Ooh, so can I go?
Yeah.
So this is really Jodie's court, right? What are the lock options? And because I would venture to say I'm probably one of your more discerning and curious people you work with, right? And the other lenders will advertise this lock-in shop thing.
Yeah.
The thing about lock-in shop is, and I learned through unapologetically challenging Jodie and her family, it's a family business, and teach me about it. I need to know, show me the reference. And if someone's allowing you to lock in shop, they're either not really allowing you to lock in shop. It's sort of semantics and kind of smoke and mirrors.
Right.
Or they're in a gray area of the law. Like there has to be how many elements? 7?
Yeah.
7 elements to issue a loan estimate.
Mm-hmm.
And one of those things is a contract. So how could you lock a rate, i.e. loan estimate, if you don't have a contract executed? So the things that exist are there's either a cost to doing that. So an upfront cost of X points or X percent. And then it would kind of suck if you lock your rate and you never, and it's a good rate, but you never buy because whatever happens, it doesn't come to fruition in the amount of allotted time that you have that lock going, whatever. Especially right now with low inventory, like I have buyers looking and there's just this one in this one neighborhood and not another one's popping up.
Yeah.
There would have been 5 by now in the last market, but not another one's not popping up. So if you don't buy, that would kind of suck if you paid a big upfront rate.
Mm-hmm.
Or they're using the smoke and mirrors thing where like today's rate's at 6.5%, but you're locked in at 7.25 because they've built in the buffer that if rates fluctuate, they'll be able to put you at where they promised.
Right.
And so the lock and shop thing. So what are your lock options? In terms of pre-locking, that's what I have to say about that. But how long can someone lock for once they're in contract? Like what's the standard lock? 60 days?
60 is easy. 90 is possible. 120 is fine.
And there's costs to going
right.
higher.
So the cost associated with the 30-day lock is going to be less expensive than the cost associated with the 60 and 90 and so on and so forth. Because obviously, if we're only having to make sure that lock is offered to you for a 30-day period, there's less risk.
Less risk.
Yeah.
You pay for risk in this game.
Now, as rates go up, there are going to be more creative scenarios. And so one thing that where Derek Tanga and I differ is like, I am trying to, know what's going on and understand it, and change for someone like Derek is scary, whereas change and understanding things and not really knowing, but doing something without really knowing the full A to Z is uncomfortable, but that's something that I want to do. And that's where Derek and I differ. But
this is high level stuff. Derek's a little more like stick to the game plan. Let's not step outside of our lane.
Yeah.
If we do a few less loans, who cares?
Right.
Like stick to what we know. And
like we have something that's proven and it's successful, and we know that we can offer this service level that's gonna not have anyone like Derek Okahashi get mad at us.
Just inquire.
However, that means that we're not stepping outside the box. I mean, I want to step outside the box. I want to know.
Well, that's why you guys are good, because you have that's perfect. That's what they say you should have in a partnership.
Yeah.
So yeah, those are the lock options. The lock and shop and the whole thing before, it's either borderline not okay, or it's expensive, it comes at a cost, and or it's not what you think. You're just getting a higher rate.
Right.
Locking for a duration of time, you can do that. And also I wanted to say, if rate, you know what I'm gonna say?
Yeah.
Do you think so? So if you're locked if you feel like, let's just lock for 60 because I want to save money, but for whatever reason there's like flooding and we got to go through all this, it's a 100-day escrow. If rates jump too much, they don't have to honor it. They'd be like, no, we're not letting you extend your lock. I don't care if you gave me 20 grand, the deal's off because rates have gone from 6 to 10, whatever. So this lock extension when there's small increments, you can do lock extensions, or when there's no increment, like when there's no increase or there's a decrease, so you can like do a lock extension. But if there were to be this huge shift, they like the upline of lending, they don't have to let you extend, right?
Right. They can change guidelines.
They can just say, no, deal's dead. Like, you had 60 days to close, you didn't. Sorry about your luck.
And they can say effective immediately, new guideline.
Is that where you thought I was going?
No.
Where do you think I was going?
I thought you were going to talk about locking in, and then if rates improve, that we have, depending on the timeline to close, that we have some considerations that we can do to make sure that we're getting you, our buyers, the best deal.
Yeah. That I thought about that earlier. I didn't go there.
Yeah.
I appreciate the answers. While the other islands are affordable for a retiree who would benefit from the low housing costs on the Big Island, healthcare is important. Yeah, so I feel like Big Islands that like early retirement, like late 50s into your 60s, and then you start to realize like I need to be next to my cardiologist. I need an ambulance. I have to be willing to come out here, and then I move to Oahu for that. Big Island, or you just when it's my time, it's my time, and if I live out in these lava fields and the heart attack happens, I'm at peace with them. That's okay too. But there is a lack of high level advanced healthcare there for sure. Thank you. I appreciate the answer. I mean, homes on the other islands cost more, but a better access to good healthcare. I think it's the opposite, Diane. Like typically homes, it depends on where. Like
Yeah.
Maui could be more expensive. It could be cheaper. Depends.
Mm-hmm.
But for the most part, Big Island, Kauai, Molokai, these islands are cheaper and have lesser healthcare. What do you really think of mainlanders buying property there? I can't unpack this whole thing right now. We've done videos on it. We've talked about it. I talked to Andrea Tupola. She's a local councilwoman, former governor-elect, or whatever, candidate. I don't solve problems in my life for my team, for whatever control I have. I don't solve problems by like removing barriers and making things easier, by padding and comforting. And I think humans get joy and growth on the other side of struggle and competition and growth and achievement. And so my answer to that would be to soon, as my time becomes a little more free and my wealth a little more abundant, start to take initiatives in the community to shift the competitiveness of local people in this economy. So we don't have to talk about not allowing other people to move here or shaming them for moving here, but instead being more competitive and local people owning more homes, et cetera, et cetera. So how do I feel when I lived in San Francisco and someone's like, oh, I can't afford it, I have to move to Sacramento? I'd be like, oh, work harder, figure it out. Here, when Auntie's like, oh, I got to move Vegas, I can't afford it, I'm like, shit, how can I help her? I'm contradicting myself. I feel different here. And so it tugs on my heartstrings more when it happens. Mm-hmm. But I would more so want to catch Auntie in her 40s before she's in her 70s and coach her towards financial health, rather than put 100% tax on people from the mainland. Right. That's the way I approach things. Maybe off topic, but do you think it would be more or less hassle to have family members bring our pets over to Oahu a couple weeks after we arrive and get settled? Emily, my easy answer to that is I would use a pet moving service and have leverage them out for that. But yeah, having family members deal with it, whether day of or day after, would be easier because they're doing it, not you. Here in the States, we often have an attorney at closing. Is that an option there? No, this is not like an attorney closing state. Now, if you want to have, especially like your HOA docs reviewed by like a company like that, we can work that out. Mm-hmm. But this is not a state where the agents kind of negotiate the terms, get it under contract, and pass it to the attorneys. I think New Jersey's like that. I don't know. There's a few states where that happens. It's not like that here.
But escrow replaces the need for an attorney in a lot of ways. Mm-hmm. Also, if you're borrowing money, if you're getting a loan, there's a lot of protections there, because as a lender, we're like, well, we need to look at the title and we need to look, so there's this underwriting process that occurs naturally where oftentimes I've dealt with a lot of attorneys as buyers and people bringing in an attorney when perhaps they're buying from family, and it's gotten pretty crazy.
Pretty
complicated when I'm like, no, that's the title document. Like,
attorney, depending on the situation, attorneys can be paid by the project or they can be paid by the hour. And anytime someone's incentivized for take longer, I don't like that incentive in place. I'm not saying they're intentionally milking the system, but I'm just, incentives are incentives. And to Jodie's point about underwriting and all that, they're so scrutinizing. Even if I were a billionaire, I may prefer to buy a house with a loan just to have underwriting. Just put $100,000 on $10 million house, just so underwriting will go through it. Now they probably be less scrutinizing because the risk is so low. No. The risk,
I did a loan for a federal judge.
Okay.
And he was like, do you know who I am? Like, I'm a federal judge. Like, why are you asking me where this deposit came from? Because he's, and my response was, these are guidelines that have to be followed. We have to ask where a large deposit came from. We have to follow the paper. And, you're going to abide by the same requirements as, someone that is not a federal judge that might be work at a hotel as a server and that's borrowing, 95% of what they're buying the property for.
Yeah.
And, he was like 40%. He was like, I'm putting so much down. This is crazy. And he was getting all mad. And I was just like, no, federal judges have the same rules as other people. Yeah.
I could see that. Well, that's good. So that's what I'm saying. If I were buying a $10 million house, I might want to just put a portion into a loan just to have that underwriter on my side and check things out, especially if it's an association, etc. But it would come with the hassle of providing your bank statements and all that stuff.
Because especially if you own a lot of property, I mean, people get so mad when we're like, we need the most recent mortgage statement, and they're like, well, I gave you the statement from December, and I'm like,
we were just signing yesterday, and they were like, you got to provide statements again. They're like, we close in. Well, they didn't say anything because they got it, but they bought many homes. But you're closing in 4 days, but we need those updated statements. Maybe off topic. Do you think a mortgage house with that family? Oh no, we already read that. I have family that bought in Waianae. Prices have gone up a lot. Any other place on Oahu that is affordable? No, the west side is the most affordable part of the island, and so if you're looking there, that is the most affordable. Veterans clinic on Oahu. Is there a clinic or a hospital? Yeah, there's the VA hospital. It's a whole big thing. Hawaii has a big military presence, and it's the biggest thing in the Pacific for veterans. So yeah, big veterans hospital. Interest rates are going up or housing prices come down. Diane, if you watch the playback, we went over this, but basically yes, but not directly, not proportionally. Yeah. So your payment's going to end up more now than it was like a year ago when rates are lower, although prices have come down some. Can you name a good HOA company if you think of any? I've never heard of one.
There is none.
I think if HOA mismanaged funds fee would go up. Well, there are some that are better than others. I think of a place like what is it called? What the building in Hawaii Kai next to? Help me. The buildings in Hawaii Kai. It's self-managed, so they don't have like a third-party AOL.
There's so many.
There's no dogs.
It's the Mauna Lua.
Mauna Lua.
Yeah.
Yeah, like the Mauna Lua. They're owner managed. So the building next door, the Commodore, the HOA fee is like 180% or so. It's a lot more because they have Touchstone or Keystone or Hawaiian Properties or whatever. They have this third party that has no direct incentive and interest in keeping that rate low. So that's one I can think of that I tend to like more, and it's really nice. Like it's kind of like being at a resort. Like in Mililani Mauka, E Vistas is a gated community, has a lower HOA fee than North Point, which is like the same product pretty much, not gated, and the same thing.
There's one in Nuuanu, Sakura, the Sakura building.
Oh yeah,
it's really hard to get. They almost never sell, but they have a very they're very well
They're managed well.
Yes, their board is like amazing. So
Yeah.
it has to be like accountant or something that was, you know, everyone bought into what he was saying, and they're like, yeah, we should do that. And
Executive Center seems like the board is, you know,
well, Executive Center is okay, but
Yeah.
you know,
there's
the
a lot,
insurance
there's a lot that
costs.
goes with that. Yeah.
Yeah, the insurance.
Arena, I can tell you, I own in there, so I'm just gonna keep it out of my mouth in case the people watch it. Could be rough. All right, we're gonna cut it pretty soon. Can you name a good HOA company, John Owen? Amen, Sister Jody. You tell that judge justice is blind. All right, guys. Well, we have 43 people on here. We're gonna start to sign off. If you have one last question, you can sneak it in. Thank you guys for spending the hour with us.
Thank you.
If pretty much this is how our process goes. You fill out the form on coreteamhawaii.com. My assistant gives you a call. There's certain days when she's not working where I may call you or Mahi or someone from the team directly. But our assistant calls, goes through a basic questionnaire, and then you schedule either a consult with us or a consult with Jody, depending on your preference and what moves you need to make and, you know, your timeline. And then we talk to you. We, you know, answer your questions, go through the steps, and then get you pre-approved and then start looking for homes. If you're a seller, then that process is slightly different. You probably talk to me soon, right away, and talk about selling your home. And if you have to, you know, if you're upgrading or downgrading or whatever, then we'll answer questions accordingly. So yeah, go to coreteamhawaii.com. We'll have it in the description, and you can contact us there. Please tell Mahe hello from the Petersons. I will. She just left right before we started this. I'll make sure to tell her hello.
Underwriter checking in.
Where? Underwriter here. Tell them you want the money. We got it. Just get us the damn mortgage statement. Yeah. Jim, you are a C on the disc scale, I bet, because you got to like check those boxes. Mine was a mess because when I bought, you know, I'm self-employed and I was not good at bookkeeping to start when I start making money. And so the first one we bought, Jody and them just dropped me off of it and just put my wife on the loan. And then the next home, we had to like double app it and just get creative. So yeah, as you know, if you're an underwriter, self-employed, it makes things even worse. Thanks for the live segment. You're very welcome. Look forward to talking with you guys. All right. Thank you guys so much. We'll see you guys on the next one.